So in this video, we will solve the long question number 3, that is Firework company. So in long question again I am telling it's very important to read out the date carefully and additional information very carefully. Okay. So what the question is, the following financial statement and supporting information relate to Firework company, a limited liability entity. Statement of profit and loss. Okay. And we have given a statement of financial position, and notes, additional notes were given that during the year end in the 30 June 2005, Fire Company disposed of several items of plant and equipment for sale proceed of 8, 8 million. Loss on disposal of 2 million is included within the cost of sale, and depreciation charge for the year was 15 million. Okay, so we have to prepare the cash flow statement from the given information. So we will go with an indirect method. So in the indirect method, we will start from the profit for the year that is given in the question. Here, we will take a profit before interest and tax. Okay, so here this is the profit before tax, and we will add this interest. Okay, so we will take a profit before interest and tax. Okay, so it is 31,750. After that, we will add a depreciation which is given in the additional information below down. Here the depreciation charge for the year was 15 million. Okay, so I have taken a 30 common, so I will put here 15,000, and we have to add the depreciation. Okay, next we have to adjust uh, loss and disposal. Okay, in additional information, it is given that during the year ended 30 June 2005, Firework Company disposed of several items of plant and equipment for a sale proceed of 8 million. And the loss and disposal, it is also given, that is 2 million. So we will put here 2000. Okay, because I have taken a 30 common. So after that, we will check out inventories. Okay, so inventory is for current year. Yeah, so current year inventory 36,000, and last year inventory was 30,000. So it is increasing, and when the inventory is increasing, we will need to subtract it. Okay, we will subtract 6,000. Okay, because it is increasing by 6,000. Then we are having a receivable. Current year receivable is 40,000, and last year receivable was 35,000. So it is also increasing by 5,000. So we will also subtract receivable 5,000. Okay, next we are having a payables below down. Payable is also increasing, so we will add payables. Okay, 6,500, it means cash inflow. So payables increasing, add, and when we add all these amount, we will have a cash generated from the operation, that is 44,250. And after that, we will subtract interest. So as we have to subtract interest after generating cash from operation, so that's why I have taken earlier profit before interest and tax amount. Okay, so we will subtract 750. Then we are having a tax paid. Okay, so tax paid, we are in the P&L, that is the 6,000. Okay, and we are also having some information related to tax in SOFP as well. So here it is. Okay, so we have to do some walking. Okay, I have done, just wait, I am showing you here. So tax, so this is the current year and this is the previous year. So previous year tax brought forward was 10,000, so I have taken here 10,000 because tax is a liability, so its balance will be on the credit side. And the current year tax was 6,500, so it is carry forward amount here. And then in profit and loss, we are also having some amount, just wait. profit and loss 6,000. So we'll put 6,000 here. We will add this, then we will get 16,000 and minus 6,500. We will get 9,500 tax paid in cash. So we will subtract tax paid amount 9,500. So we will get answer net cash generated from the operation, that is 34,000. Okay. After that, we will calculate cash flow from the investment activities. The earlier was the cash flow from the operating activities. Now we will calculate cash flow from the investing activities. So we will start with the how much plant we have purchased in this year. So we have given in the question it is given the carrying amount of the plant brought forward and carry forward. Again we will do some working like this. Okay, so brought forward amount was the 93,000 and carry forward amount was the 110,000, and depreciation also given in the additional information, that is 15,000. We will put the depreciation 15,000, and as we have disposed some plant, then sale proceed was 8,000 and we are having a loss of 2,000. It means the carrying amount of plant was 10,000, so this whole 10,000 will be here. And we are also having some devaluation surplus, that is 10,000 was devaluation surplus for the current year was 10,000, and uh, previous year revaluation surplus was 8,000, so it has been increased by 2,000, so we will put 2,000 here. And after that we will add all these amounts, we will get 135,000 and we will subtract 93,000 and 2,000, we will get a cash paid of 40,000, which we paid for the purchase of plant. So it means we are paying the paying for purchase of plant, it means cash is showing outside, so we will subtract. Okay, and after that proceeds from disposal also given in the additional information, that is 8,000, I mean 8 million, so 8,000 it is cash inflow, so we will add this. After that we will add this two amount, we will get 32,000 in minus figure. So after that we will calculate a cash flow from the financing activities. So first we will look after how much loan how much capital we share capital is increasing from the previous year by 5,000, as well as share premium also increasing by 5,000. So we will add these two amounts, we will get 10,000. So issue of share 10,000 I have put in there. After that we are having a retained earning balance carry forward and brought forward. So we will calculate how much dividend we have been paid. Okay, so here I have calculated brought forward retained earning was 85,000. Here we are having the figure, and carry forward was 96,000. Okay, and in profit and loss we are having the profit for the year. So that is, just wait, uh, 25,000. So we will add 25,000 here. We will get total 110,000 and subtract 96 from this amount. We will get a dividend. How much dividend we have been paid in this year? That is 14,000. So we will subtract 14,000 in the cash flow from the financing activity. 14,000. So we are having this total figure, and when we will add this cash net cash generated from operation, that is 34,000, and plus this net cash from the net cash flow from investing activities and from net cash flow from the financing activities, we will get the net decrease in cash, that is 12,000. And we are having the cash at the start, means previous year cash, uh, here it is 10,000 given. Okay, so we will add this amount, we will get 2,000 in minus figure, it means overdrawn. So we are also having overdrawn figure in the current liability bank overdraft, that is 2,000. So it means our cash flow statement is correct.